Stocks on Wall Street extending their gains Wednesday after the Federal Reserve released its policy statement. Well, let's get inside the minds of the Fed and the markets with Kevin Mon. He's Chief Investment Officer at Hennion and Walsh Asset Management, joining me from Denville, New Jersey. Welcome back, Kevin.
Thank you, Fred. Thanks for having me.
Great to have you with us. Now, Kevin, we didn't get a formal announcement of the start of tapering from the Fed, but a warning of sorts. The Fed saying they sees a moderation in the pace of asset purchase may soon be warranted. That surprise you or come as rather hawkish?
I think it came across as a little bit more dovish, in fact, Fred. And this all goes back to the TNT approach of the Federal Reserve, if you will. That being taper, narrow, and tight. So as it relates to taper, we know that they're purchasing roughly 120 billion of bonds every month. And they indicated today that if in fact the economic recovery continues, they may soon start to discuss tapering. We believe that will in all likelihood happen by the end of this year. As it relates to narrow, the N in TNT, that relates to actually shrinking the size of their balance sheet, Fed, by selling bonds outright off their balance sheet. They did not discuss that at today's meeting. And then finally, as it relates to tightening, the Fed did unanimously that they're going to keep the Fed funds target rate in a range of 0 to 25 basis points. But we do know now that the median forecast suggests one rate hike in 2022 and now one rate hike in 2023. So at least we got something new out of the FOMC meeting this week, Fred.
In fact, Kevin, the Fed fund future has been rising, indicating that it's raising their chances of a rate hike by December 22 to over 80%. Back to what you were talking about, based on what the Fed said today in its statement, when do you expect to see a formal announcement of the start of tapering?
I think over the course of the next month, we'll start to see some indication of when they anticipate starting tapering. I do believe that will in all likelihood be at the end of November, perhaps the beginning stages of December. And it's going to be a very methodical, drawn out approach, and they're going to be transparent throughout the whole process. They do not want to catch the market off guard. Similar with respect to rate increases. As we know, they continue to release updated versions of their dot plot chart, which shows those median forecasts. Of course, Chair Powell always says, take the dot plot with a grain of salt, so that could change clearly from meeting to meeting.
So you're saying an announcement at the next Fed meeting in November?
I believe that we will likely see an announcement in the next meeting in November, yes.
What do you think, in your view, made the Fed more dovish? We've got a lot going on in Washington, whether it's a debt ceiling or the budget resolution, and then there's China Evergrande. What, in your view, are the factors behind its decision today?
Well, some of the initial outtakes that I saw, there are remaining and lingering concerns around the Delta variant of COVID-19 and additional potential variants that could slow down this economic recovery if, in fact, more restrictions need to be put in place to help limit the spread of the coronavirus. Clearly, raising the debt limit, the passage of the infrastructure bill, the budget resolution bill, those all have implications on the economic recovery as well. So the Fed is being very guarded with their TNT approach so as to not risk blowing up this potential economic recovery that we're currently witnessing.
What was it about the Fed statement that you think investors welcomed?
I think what they welcome most is that there's not going to be any sooner tapering than was originally anticipated, that there may likely only be one rate hike in 2022, and as it stands right now, only one rate hike in 2023. That only moves us up 50 basis points from where we are right now, still at historic lows. And that means for those investors looking to find attractive pockets of income opportunities, that might be challenging for the next couple of years, but that is very accommodative for the stock market. My pleasure, Fred.
Our thanks to Kevin Mon of Hennion Walsh Asset Management. I'm Fred Katayama in New York. This is Reuters.